Good start. Welcome back to the Levers Podcast, episode 21, with your awesome host, Tej, Little Perp, and Shake. I think we'll just start with maybe a quote that somebody once said, which is that overhearing Cosmoism, Polygon, ZK, SBF, the merge, all across Williamsburg espresso holes. 17th century. Enlightenment in the London coffee shops. 20th century. Silicon Revolution in the SF coffee shops. 21st century. Crypto revolution in the New York City coffee shop. If any of our listeners can figure out who tweeted that, you can come on the podcast.
Kissinger. It was Henry Kissinger.
It might have been Henry Kissinger. I mean the
I did not follow that at all, bro.
The intellectual.
That's what we were just talking about. You lost me about 10 words into that, whatever that was.
So we got Tej, the most intellectual man on the cast. We got Little Perp. He literally sent me a tweet earlier, or Instagram earlier today, of him holding a water bottle with a tank top in the elevator, right on brand. And we got Shake, who I will say, I think Shake is entering a flow state recently. He comes in and out of them, but I would definitely check out his Twitters at 0xshake, because the man is firing on all cylinders right now, and it's best to catch him. We got a good episode today. We're going to start it off with TJ, who has been building up to a momentous series of threads and wrote a banger earlier today. TJ, Bitcoin, what are we talking about?
Yeah, let me pull up this thread real quick. So I don't know. So I've been thinking about Bitcoin quite a bit lately. I feel like I go through waves. Maybe we all do, where, at the beginning, we're all kind of orange pilled. Like, you learn about Bitcoin. It's, the biggest, most liquid. It kind of dictates where the market goes. You get orange pilled, and then you go kind of deeper into the weeds. And as I got deeper in the weeds, like, I sort of started to forget about Bitcoin and started to learn about Ethereum and other L1s and just like all the interesting entrepreneurship that's being built. And I think once you get into the entrepreneurship, like, you kind of forget about Bitcoin, or I think you forget about it for two reasons. One is it's just like, it's big and it exists and it's just there, right? And it works. And the other thing I think is, as you start to like dig into the innovative side of crypto, where people are building things, you're kind of like, like Bitcoin's just like this like ossified, base layer that doesn't really do anything. But anyway, from time to time, I start to think about it more. Mainly when like the price is low, right? It forces you to kind of reevaluate your models to make sure that you still understand why this thing has value, if it has any value. And also at Maker, I'm looking at a number of opportunities to fund hash power backed loans right now. So basically underwrite senior warehouse lines to Bitcoin miners, right? Which is risky as shit. It takes kind of the risk of Bitcoin and gives you none of the upside. So you issue debt to these guys. You allow them to finance the buying new ASICs, new land, new whatever, to hopefully make their operation more efficient. But if they default, then you're kind of screwed and you got no BTC upside. So anyway, I've been thinking about Bitcoin quite a bit. And it kind of occurred to me that, Bitcoin is sort of if it works, and I think it will, I think probability is that Bitcoin stays around, it continues to accrue value, and it sort of pulls energy away from our existing systems. But it's kind of like a multi-decade peaceful revolution. And I think kind of the reason for that is it sort of attacks gently the existing system in, I think, three ways. Like, one is money. That's kind of obvious, right? Like, especially right now, you look around the world, inflation is everywhere. Like, no one's immune. It's in Japan, it's in Europe, it's here. Of course, it's emerging markets. And as people start to like, as their lives become more difficult to live, they look at this like alternative system where no one can control it and print a whole bunch of money, and it's a nice escape. So that's the money escape. Then on the energy side, right, like particularly right now, we're trying to make this move away from fossil fuels happen. And it's mainly been done, like, you have these ESG policies that like the US and Europe are trying to push through, but it's kind of like there's no reason for people to follow those policies. They've just been prescribed for everyone, right? But now that oil is at $100 a barrel because of a whole bunch of dumb policies, these BTC miners, what they do is they're just trying to be capitalists. They're just trying to get the cheapest energy possible and be able to predictably run their business, which is mine Bitcoins. And so what you see, which is really interesting, is they're like, well, if oil and fossil fuels are going to continue to do these crazy spikes because of these dumbass policies, I need to find a source of energy for me and my business that works for 10, 15 years, and it can't be corrupted. And so you see like a lot of these guys going to like stranded hydropower and geothermal in various areas and locking down those energy sources for 10, 15 years, which is sort of an energy revolution. So you got a money revolution, energy revolution. And then I stole this completely from biology, but you really have a revolution in politics too, right? People are increasingly growing like a little bit disillusioned with the state, but you've never really had the ability to opt out, right? You have to move your family. It's just, you can sort of vote with your feet, but it's very difficult to do so. And so you're just kind of just trapped with these policies. Well, you could sort of take this reprieve in kind of the network state with like a Bitcoin as kind of the money. And as soon as many people do that and they sort of identify more with these networks, these crypto networks, than they do with the political state, I think what you'll see, which will be awesome, is all these political states will be competing to be open and friendly to these networks. So money's changing, energy's changing, and I think politics are changing. And they're all changing without violence and war and horrible shit. It just happens over time. Energy sort of moves from the existing systems to Bitcoin and Ethereum system. So, that was sort of a rant. I'm not sure the thread was all that much clearer, honestly. It was pretty stream of consciousness, but yeah, that's what I was thinking about today.
So basically, like, you think there's these various tailwinds that point to more adoption of Bitcoin. So as the inflation hedge, that's like the digital gold. For energy, I guess you didn't maybe just talk about it, but the reason why, like, Bitcoin is a consistent use of energy, and so as people go to these more, I guess, volatile energy sources, they can use Bitcoin as a way to harvest like the unpredictable surges of energy. And then politics, people might want to opt out of the kind of top-down institutions as well. And you see, because of that, more and more people are going to keep wanting to hold Bitcoin, even though it's boring and you can't do anything with it, pretty much.
I mean, what is like the timeline for something like that to play out?
I mean, look, I think the timeline is very much, or I should say the speed is variable. So when stuff is all good, right, the dollar is inflating at 1% a year and the political system generally works, let's say like during like an Obama era to look back, right? Like the Obama era seems like a time of great prosperity and peace compared to what we're dealing with lately. But when stuff is good, BTC as a system, it doesn't quite accrue as much energy. And then I think when things come to a head, like kind of where they are now, with war and, weakness in emerging markets and oil back above $100 a barrel, I think these are times where that system accrues a lot more legitimacy and energy. And so all of a sudden, where you had very slow sort of gain of legitimacy, then you have this stepwise function. But I don't know. I mean, no one knows, but my gut says this is a multi-decade sort of thing where generally the rate of change increases. So at the beginning, it's very, very gradual, right? It's largely like a revolution for ideologues or like people that are super libertarian. And then as the adoption curve goes, it breaches into the mainstream. And I think things just kind of set off from there, which is why I think like I sort of said the war has already been won, because I feel like inertia is in BTC's favor. But I wouldn't be surprised if this next kind of period of economic and political turbulence wasn't the one to really make BTC's place in the world concrete.
I guess. Oh, go ahead, Lucas.
I was gonna say, I feel like it's interesting because, so is there ever a moment then along like the path of BTC adoption where it moves from like a bottom up type of movement to like a top down one, or is it only once it's reached kind of critical adoption that then it becomes more of a top down adoption type of thing where governments and large institutions are like kind of using it, and so that leads to, you know, just normal retail users using it?
So I guess here what you mean by top down is it has adoption at the corporate and public sector levels.
Yeah.
That's a good question. I mean, I think it makes more sense for corporations to be open to it before states, at least if the states still have the ability, the sovereign ability to issue their own currency. And then if you're dollarized already, it's a little bit different, right? Because you're basically already betrothed to someone else's shitty monetary policy. And so if the Fed is doing things that you don't want it to do, historically, you haven't really had an alternative, because usually if you're pegged to the dollar, say your emerging market currency, like, I don't know, the Egyptian pound, I don't know if that's even pegged to the dollar, but usually pegged to the dollar because you're not strong enough to float your own currency. But now if you're pegged to the dollar and you want sort of an escape, maybe in that scenario you would adopt BTC. But still, then I see it as very much the way it enters kind of the institutional avenues, whether that's public or private sector, is first through like opportunistic capital allocators like hedge funds and sovereign wealth funds. Even that's probably where it starts for the states. They're like, well, you know, if I'm the Saudi Arabian sovereign wealth fund or Norges Bank, the Norwegian sovereign wealth fund, you know, and you're pulling oil out of the ground, like, you know, like that era is coming to a close at some point. And the question is like, how do you maintain your purchasing power going forward? I think in that scenario, BTC might be useful, but I think it's mainly emergent from the retail level, and it'll be a while before it's top down.
I mean, so like for the top down piece, I think we were also going to talk about stable coins and why everyone wants to have their own stable coin. Just like every crypto project wants to have its own stable coin, a government wants its own fiat currency, because then it can basically, in the short term, create value. So for like top down institutions to accept Bitcoin, it's kind of an acknowledgement that they're giving up some level of power. So I think to the extent institutions support Bitcoin, is because they feel like they have to earn like the curry the favor of I guess their beneficiaries or users. But
So you're saying that
yeah.
institutions don't buy it to be some type of like alternative currency or store value. That's not the reason they buy it.
No, I mean they would, like, I guess no one's going to start using BTC as their sole like currency, because they want to be able to mint their own currency, right? And even like moving from the dollar to Bitcoin, I guess, as what backs their currency, it's an upgrade because they won't get, I guess, in some ways it could be an upgrade because they won't have to deal with like the American dollar debasing. But all else equal, like countries will want to have like their own fiat currency that they can control. And I guess the only reason why a government doesn't use their own fiat currency is because no one else, there's not enough demand for it. So then they're forced to peg it to something. And they usually peg it to the dollar because the dollar has the most liquidity, right? So for people, like, no one's ever just going to accept, no government's going to be like, we only accept Bitcoin as our currency, because it would just make doing debt really hard. And even it'll probably be a long time before they use Bitcoin instead of USD. Why are you laughing, Lucas?
Because Shake started walking.
Flow state, baby. Flow state.
Is this how you get great tweets?
Partly, yeah. That's the secret.
Because
3
people do
monsters
their best
before 7 a.m. You know, walks, pop smoke, playing full blast. You know, that's the secret right there.
That's the thing. Most people do their best thinking while walking, but then they do their typing while sitting. So you've kind of reached this unique state where you could be just in the flow thinking and shit posting at the same time. It's really a comparative advantage.
You nailed it, bro.
Dude,
that's
that
it.
Is some
and I actually go back and forth. Like, so I'll stop it when I'm like making a meme or something or typing, and then I go back to walking. I try to go back. It's actually pretty hard to like do anything that requires accuracy while walking because I do a lot of stuff in Photoshop and it's like impossible.
So you're not worried about like the accuracy of your statements while you're talking to the levers
Not at all.
listeners?
Not at all. Not at all.
What's
And it
the
shows by my growth, you know.
what's the pace we're on right now, Shake? Are we like 1 mile per hour?
Let's do
Speed
I
it
wonder.
up.
I don't know what it is.
As he
0.7.
turns up the treadmill, does the brain run more quickly?
Well,
Or
yeah,
is
but
he
then I
trying-
get out of breath like really fast, you know.
Dude, by the end of this show, I hope you're running, bro.
He's gonna be huffing and puffing.
Is oh sorry,
Okay.
go ahead if you want, Shake.
No, dude.
I'm curious, Lucas Shake, as like the resident NFT goblins and NFT goblins. Like, what are your thoughts on Bitcoin?
Dude, I
Do you
mean,
do you even think about it?
Yeah, does it even exist?
I this is something I find actually really interesting because I don't really. I mean, I just hold it just because when I was first learning about crypto, that's normally what you first learn about is Bitcoin. But like I don't think about it at all. I just assume if crypto is going to work, Bitcoin's going to work. And so, I mean, maybe it won't, but it's like it's ignorant to not have it as part of your portfolio right now, you know? But I think you're like if you're getting at the idea that a lot of like it's pretty irrelevant for a growing part of the crypto space, I think it would be interesting to look at statistics because I do think, especially in the Solana NFT space, like that's one of those products or one of those sectors where a lot of people who are onboarded like they don't even know that they're using the blockchain sometimes, you know, like I mean obviously no, but like their depth of knowledge is so low and they were onboarded directly into Solana NFTs. And so as a result, like they don't really think about Bitcoin that much. It's only probably after you've spent some time in the space and maybe like price action on NFTs aren't that good that you start looking at Bitcoin and other coins and exploring it. But yeah, I do think it's interesting to watch like the reverse. People do the reverse, whereas before everyone went Bitcoin, Ethereum, then into alts. It's like in Solana NFTs, I think there are a lot of people who go Solana NFTs and then they don't even look at Ethereum because they become maxis, you know, and then they think about Bitcoin. So it is interesting.
Do you think if you told those people that if BTC died, everything else would die, how would they respond to that? Would they believe you, or would they be like, "Oh no, that's idiotic. Solana is a different blockchain. Why would BTC matter?" Like, how do people think about that? Do they think about it as like a bedrock or an alternative?
That's a good. I don't know, Shake. What do you think? I mean, Shake's the mega influencer, so he's talking to the people.
Dude,
you know,
dude.
He's the man of the people.
Stop it. No, I was just reminded of that meme of like if OK Bears fails, Solana fails. Like if Bitcoin fails, Solana fails. But yeah, I don't know. It's hard to say. It's hard because it's hard to know what other people think about that specifically because I don't really like. We just don't really talk about it. We don't really talk about Bitcoin ever. But my view of Bitcoin personally has changed a lot. Like because like you guys said, like when you come in. You know, you listen to the Maxis, the Bitcoin podcast, and you're like, oh my God, this is a new paradigm, blah, blah, blah. Kind of drink the Kool-Aid. The more that I've like just tried to look at it somewhat objectively, it's one of those cases where like the market's never wrong. And it just trades like a levered like NASDAQ future, you know? And so it just trades like a super speculative, risky asset. And then the rest of the crypto market's highly correlated with Bitcoin, which is highly correlated with the NASDAQ. So I don't know, like right now, I don't really buy into the Bitcoin bull case, but that could change, you know? So I hope that changes. Like, I guess, I hope that I'm proved wrong. Right now, I'm personally like kind of bearish on Bitcoin because the more that crypto gets adopted, people learn about shitcoins and then they learn like, wait, bro, you guys held Bitcoin for a 2x. But these guys are making 100x on their Ponzi schemes. Like, why am I going to hold Bitcoin, right? Or hey, these guys made 10x on Solana. Like, it's not even complete low cap shitcoin. So the more that it gets adopted and it gets awareness, the more people learn about there's other things. So why are they just going to buy and hold Bitcoin as a speculative asset? I don't know. But again, I hope it changes. Like, kind of interesting anecdote is I was with a couple guys who went to Congress to lobby for crypto for like the Solana Foundation. And they said they talked to a congressman. I forget who it is. He's a pro crypto guy, but he said I forget the congressman. I wish I remembered his name, but he was like, dude, I think crypto is going to save our currency, which I thought was pretty cool. Like that was his exact words. He was like, I want to make sure that this shit gets taken seriously. And like the way it exists right now from the outside, a lot of people don't think it's serious. And so he was basically telling these guys, like, as ambassadors of Solana and crypto, you're being watched, and like, just remember that. Like, remember to like, you don't have to fucking wear a suit and tie everywhere you go, but a lot of the things we do as a crypto community and culture, if you think about it from the outside, it's like pretty, it seems not serious. We call everything a scam, a Ponzi. Like, we throw around the word Ponzi a lot. We throw around the word rug pull a lot. It's like, we just talk like degenerates. Like we talk like we're gambling, and a lot of people are just gambling. And so from the outside, what does it look like? It looks like we're just gambling, right? And if we want it to be taken more seriously, which is like funny, because out of all of us, I'm like the last guy should be saying this, right? Because like I'm the one who's like doing this shit. But if you want to be taken more seriously, like some of us have to be kind of serious, And like, so I just am hopeful over the next 5 to 10 years, like that this narrative changes and that Bitcoin stops. That it as a price wise, it becomes more like something like gold than it does like a levered, NASDAQ index.
Yeah, I think I do think the only like the only thing that I have seen which does, I think, reinforce, and this is mostly from a trader's perspective, and like, to anyone who's listening, who's not in Solana NFTs, it's mostly just trading. And I think what is convincing for people is when you see Bitcoin nuke, like getting to your question, TJ, and then you see the rest of the market nuke. And like, I remember when I was first getting into crypto, everyone would always be like, traders mostly would be like, Bitcoin is king. Like, you have to respect Bitcoin if you want to trade the market. And it still kind of holds that status. It's like, even today, right now, like Ethereum could go way up, in my opinion, and Bitcoin could stay flat. But if Bitcoin started to dip, Ethereum would suffer a lot more. And so I do think that's like the most compelling thing for new entrants who aren't coming in the Bitcoin, Ethereum, altcoin, and are instead going the reverse way, to kind of realize, even if they don't understand the fundamental value proposition, but just like the value proposition as a trader.
I have a question. When you're just like, okay, you're talking like people get into crypto and they see like how volatile products are on a super short time frame, right? Like, you got to get out of NFTs really quickly or L1s really quickly because they'll go up and they go down super fast. Like, are you basically, is the typical profile, they just hop into stables and into something super volatile and then back into stables constantly? Because one of the bull cases for Bitcoin is that basically everything besides Bitcoin is still more of a VC bet, right? Like, ETH could honestly still not be relevant in like a couple years, right? Sol could obviously not be relevant. Oh, I'm serious. There's a high chance ETH is irrelevant. Sol could be irrelevant, like, but you're like, well, BTC will just get wrapped onto any chain, so I'm comfortable holding that, right? But sounds like more your profile is like they're just holding USDC and then they're just like bridging USDC to whatever chain that they're on next.
Actually, in Solana, they think in Sol, which is so crazy to me, because it was close to $300 and now it's like $40. But they think in Sol. But yeah, I think that's a good point. And a lot of kind of like of the previous cycles, veterans, like I know anecdotally, a lot of them trade and denominate in Bitcoin or in ETH. And so I think there's a case to be made for that. And the other point is, we've talked about this on a previous podcast, like what are the scenarios where Bitcoin could get flipped? And Chris said something to me where you were like, part of me is like, put my money in things that I like philosophically believe in. Like, even if it doesn't mean I'm going to get, like, 'cause Chris is involved in this shit, he knows that like he'll probably get a much better return on Sol than Bitcoin. But it's kind of like, okay, you have to forego maybe there's other reasons to invest in something than just purely like ROI for some people. And I think that's a good point, like to make.
Well,
It's also I think on that piece, like, my guess is the reason that someone Crisp holds BTC is not because there's a philosophy. There's philosophy with a lack of upside. My guess is it's like, as someone who has a variety of options, really like a universe of options of investing in various coins, like, you want to hold something that you understand and fundamentally believe in. Like, obviously, the further out in the risk curve you go, there's 100 baggers waiting for you, and who knows what BTC is? It's not an 100 bagger. Maybe it is. But it's unlikely. It's less likely to be a 100 bagger than a shitcoin, but like, if you spend a bunch of time with BTC, you can get comfortable around its fundamental and unique value proposition to the world and the incremental holder, which is, I think, why a lot of people are comfortable holding it. And especially when confidence evaporates from the market, why you have bag holders who will refuse to sell. They look at a whole bunch of simulations of the world, and in a lot of them, BTC accrues a lot of value. And I think that's kind of why it has the role that it does. And nothing else acts like BTC, right? It's inertness, and it's how unchangeable it is kind of unique to it.
yeah, I mean, I'll just say I think the game theory is that people always, or not always, but most likely hold BTC, where like you're basically saying, like, and the argument for why ETH would flip BTC is that basically the people on ETH will denominate in ETH because it'll, be what everyone thinks in. But I think fundamentally, like, all these layer one chains are still like, they're like startup nations or countries, like, I don't have confidence in which one's going to make it. Like, obviously I like building on Sol, and I am like, I think I can build cool things there, but I'm not like, oh, this is 100% going to make it. Right. And so then I feel like the game theory of crypto is like, if crypto makes it, people will probably hold BTC in the future.
Well, also,
That's a really good point.
I think
Like,
I think there's the reverse too. Sorry, Shake. I'll let you go in a second. But just as if crypto makes it in the long run, BTC will accrue value. I think unless BTC succeeds, or I should say, if BTC dies in the short term, it means very bad things for crypto in the short term.
Yeah, I guess I misquoted you, Chris, because what you're saying is basically like, it's pretty safe to assume that Bitcoin can be this proxy for blockchain assets, for digital assets, like as a whole.
Yeah,
Right.
I think so. At least if it's not like, as long as it's not like fiat digital currencies. Yeah. Like just
people
because
will just buy, enough people will buy Bitcoin so that like it doesn't go to zero, and basically, and like, because they're trying to get exposure to this huge asset class that includes NFTs and metaverse and DeFi and all these things, but they just buy Bitcoin.
Yeah. I mean, I think if you were so confident in L1, like you knew that all of DeFi was going to run in its pipes, that would be like super bearish for Bitcoin. But like, I don't think no layer one is like so good that you could be like, everything's running on there, right? Like, you can't really build that much on ETH L1. You're waiting for the L2s to come. Solana still needs to prove itself. Like, all these things need to be proven out, right? So it's not like you can just say what's going to flip BTC. And so that's, I guess, why the game theory comes in there.
Is there a comparable in equities? There's not, right? To Bitcoin, like where you could say, oh, I'm betting on like tech, and I'm going to buy this one asset that is going to have a worse return, but it's a good proxy for tech or internet like stuff.
I mean, I think in a sense the analogy, or maybe not the analogy, but how you describe Bitcoin as like a indexed bet on crypto, like, is right in some ways, but it also feels like describing Ethereum like that is also fairly accurate. What I'm going to make a case fairly soon. I don't know if it's perfect, but when you think about like BTC as a revolution, right, and it sort of being the bedrock of a network state as opposed to a political state, I feel like defense spending and like investing in an index of like defense contractors isn't a bad idea either, especially like in the early I don't know, like 40s and 50s, when like the US was going out and like defending its ideology abroad. I feel like that's kind of where we are with BTC, right? And if you want to finance that machine, like buy war bonds or whatever, and if the US grows and it's worth grabbing that territory and ensuring that, alternative ideologies don't thrive and your version of the world is the one that grows, then those war bonds should be made whole. You should gain on those, and BTC all the same. So you're giving up some upside, but if it works, then BTC will definitely accrue value.
I also think like going back to what you were talking about at the very beginning in terms of the thread and the the three like different areas it'll affect, like that means that like the people who are going to come into the space are probably going to be progressively smarter and like they're not going to be looking to just full on degen. So as like the space matures, like they're going to be looking for different products that make sense to them, and like Bitcoin might resonate with a lot more people than like a Solana NFT. And so I think that might be a way for it to, or that might be like a counter narrative. But it does, I mean, just among the four of us, it does seem like we all, despite like this discussion, do feel like Bitcoin is like one of the safer bets at this point.
Yeah. Let's try to come up with some bear cases. One bear case, obviously, is like crypto doesn't make it. So I mean, I don't really want to talk about that.
No, it's not. It's also it's kind of like the equity guy who's like, yeah, you should be careful investing in equities because if Russia drops a nuke, then it's nuclear warfare. It's like, well, bro, if it's nuclear warfare, then you don't care about your equity portfolio.
Yeah. So maybe let's just assume that you've hedged your assets responsibly outside of crypto. So we're just talking about what you're allocating to crypto, if you are. And then I feel like in crypto, the bear case for Bitcoin would be that probably like people are more willing to hold stables than like crypto maxis want to admit, right? And so like you basically will just do all your activity on chain, but then you'll still just, when you feel afraid, you just go back to like USDC because you want to be able to basically you think you can off ramp into real world currency, or like the normal USDC that you can pay for stuff with, which I guess is really what does go on, right? Like a lot of people hold stables, and they're willing to basically just pay the inflation tax so that they can pay for stuff in the real world, right? And I feel like BTC's lack of like the people who are into BTC are so against interoperability that it makes it harder to hold it, so I feel like that's maybe like one of the worst things about it, but what do you think?
I think there's two bear cases for. Well, I mean, I think that's valid. I think there's two bear cases that came to my mind for BTC, leaving out the crypto all fails. I think one is like a near-term flippening. I think a near-term flippening would be really ugly for BTC. I think the way that happens is if all of a sudden that institutions are coming narrative, it happens in 2022, and institutions come in with a very simple model, and it's I want to hold a blue chip crypto asset and I want it to be productive, and I don't want to run a fucking mining rig. And so they buy ETH and they buy a lot of it, and then it flippens early on, and then BTC confidence disappears, and then those lifetime holders who will self-professed never sell, they see the flippening and they sell. And I actually can't think of the other one. I'd be curious to hear what you guys think about this, but I do worry as the block subsidy tails off, if in its current state how people use BTC, there's enough network activity to incentivize security. I think those are the two bear cases for me.
So on your first point, I was going to say something pretty similar. Like, I think there is a risk where like another asset basically in the next few years has a better narrative in terms of like something like being environmentally friendly or something like that, because it'll take time for Bitcoin to be like much more for that narrative to pick up, at least, no matter how true the underlying facts are. And so if something like if ETH actually gets like control of this like hard money narrative, and they move to proof of stake, and everyone's like, oh, it's environmentally friendly, blah blah blah. Like, that's one bear case I could see for Bitcoin more generally. Sorry, TJ. The second I had a thought on your second point, but as I was saying that, I now forget what the second point was again.
It was just the if the subsidy tails off and there's not enough network
Oh.
activity to incentivize security.
Yeah, that dude, I think that's a really interesting point and something that is pretty pushed off. Like, I'm reading the Block Size Wars right now, which also would recommend to everyone. It's like an awesome like story narrative type book about what happened during the Block Size Wars, and like one of the opening kind of chapters talks about how that is like a really ignored fact about Bitcoin. And it's definitely too early, I think, to like FUD it based on that, right? Like, the network can still have huge growth and adoption, and there can obviously be innovations, but it is one of those things that like is, I feel like, kind of just like pushed to the side because there's so many other things that people are working on right now. I mean, the Lightning Network is not something I've really dug into that much, and I'm like curious, like, is there additional functionality coming to Bitcoin? Because that seems to me like the bull case, right? Is if you can keep the actual Bitcoin with its narrative and then have a Lightning Network or some sort of functionality network that's smart contract network built on top of it that is effective and allows other use cases.
Yeah, I mean, I think that's a great point. To the extent that, so one of the criticisms of BTC, let's rewind for a second, as hard money is, people are like, yeah, gold, it abides by certain physical constraints that make it scarce, right? It's dense, it's scarcely populated or scarcely distributed on the earth, blah, 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 blah. And BTC has those things, right? So it's constrained by energy, and difficulty rises to lock in mathematical scarcity. So that's a direct comp. But one of the things people like to bring up is, well, gold has this like really important, unique industrial use case, right? In technology or in whatever other ways. And BTC doesn't have that. And so in theory, this lack of network activity, that issue could be solved if there were an industrial use case. And I don't exactly know how like the numbers work. If Lightning were built and Lightning enabled certain amount of transactions, like to what extent that would make up for the lack of subsidy, or if smart contracts were built on top of like a network upgrade and that kicked off some activity, to what extent that would make up for a subsidy. But to steal directly from network state, like Balaji talks about this idea that as we go forward, and it's more and more difficult to triangulate the truth because the state and the media like to manipulate it and spin their own stories and deep fakes and all this good stuff, right? It's going to become more and more valuable to have cryptographic truth. And so theoretically, you can use a blockchain like Bitcoin, like you can transfer value, sure, but you can also, ledger information on chain. So to the extent there was some sort of information that someone wanted to prove was in fact correct, timestamped and signed, like the BTC blockchain, with all the value it secures, could be sort of like a Fort Knox for data, right? And so to the extent that that narrative took off, then maybe like the Bitcoin blockchain serves as this industrial source of truth that only stores like the most valuable information in the world, which I thought was kind of interesting. I'm not sure if I buy it, but I think that would help to kind of alleviate the narrative around like BTC kind of just being frivolous and a store of value. And if it's a store of value and not a money, then people aren't going to exchange it. And people aren't exchanging it, then there's no network activity and you're back where you started.
I'm pretty confident Bitcoin will never be a medium of exchange. Because like
Conviction.
just like a medium of exchange usually has a elastic supply and an increasing supply. And that's why like you need it literally, like the characteristic you want is you want the supply to increase when people need it to spend it, right? And Bitcoin literally is orthogonal to that. So in some ways, like the Lightning thing is kind of dumb, right? Like they're trying to enable microtransactions. If anything, I feel like they should be trying to interoperate with like DeFi systems. Like Bitcoin maxis should try to make Bitcoin the de facto collateral on every borrow lend system, even on other chains. But they don't do that. Like it is still a collateral for a lot of things, and on centralized exchanges still uses collateral. But like ideally, you would go on to like Sol, and everyone would be using Wrap BTC as one of their collateral, and they would just be loaning USCC to pay for stuff, right? and it would just actually be digital gold. It'd be this like the best collateral you could have. But instead, like they're not very keen on interoperability and they're trying to do Lightning Network. Like another reason you'll never use Lightning Network, as long as you have to pay taxes, why would you pay for things with Bitcoin? You're always going to borrow against your Bitcoin and pay for stuff and then pay down your loan later to avoid taxes. So it's kind of like, I don't know. I mean, I could be missing something, but that's my understanding of how kind of like medium of exchanges work.
I think that's a great point, and I'd never heard that. But it's the like the tribalism that typically like tribalism is there to like grow a religion that makes everyone like really passionate about the thing, which typically helps you, right? But in this case, if BTC maxis are too tribal about BTC that they refuse to acknowledge that Ethereum is valuable, and they don't want the BTC to be wrapped and used for what it should be used for, which is pristine collateral on the smart contract economy. I mean, you're cucking yourself completely.
Yeah, like, well, this gets to one of the other topics we wanted to talk about, right? Like stable coins. Like I was thinking while you were speaking, why doesn't Bitcoin have its own native like stable coin protocol that can plug into like the BTC network easily? And then I just realized like, well, you'd still then have to bridge it over to Ethereum or Solana or whatever to actually like use that stable coin for probably anything productive, you know? But I am like, what do you like? It would make sense to me if there was a version of like Maker on the Bitcoin network, you know, because then you could lock in your Bitcoin and use it as a medium of exchange, right?
Yeah, I mean, you could like you can envision a Bitcoin native stablecoin coming about in one of two ways. You can either have a stablecoin on Bitcoin and wrap it, and it goes over to Ethereum, or you can have an Ethereum protocol that issues a stablecoin against BTC assets, right? And that's already kind of what Maker is, right? So to the extent that DAI is completely backed by BTC-based assets, that might as well be a BTC stablecoin, right? Because belief in that stablecoin is basically saying the monetary authority that issues this thing has chosen collateral that I believe in. And if all that collateral is BTC based, whether it's BTC itself, so we use wrapped BTC, it's a huge collateral type, or a BTC derivative, such as hash power backed loans, you effectively have a stable coin that, if it's widely used, people basically believe in whatever standard you're using. In this case, it's not the gold standard, but the BTC standard.
It's a really interesting dilemma because of which I think is, you know, something I've been talking about a lot, and a lot of people I think are talking about increasingly. Like people just aren't familiar with what the thought leaders of the Bitcoin community, like their views on stuff, right? And just how important to them it is that Bitcoin remains as like simple a product as possible. And they still have a lot of sway over the protocol. And it's probably partly a huge reason that BTC has done so well is that there are like these diehard kind of ideologues who actually have a vision for Bitcoin and how it fits into the world as we know it today, and are going to make sure that Bitcoin fits that vision. You know, there's not many products like that.
No, they're not.
Like look at and governance is such a difficult thing in crypto, and Bitcoin is probably one of the most complex systems to run a governance system. And yeah, there's been a lot of disputes and it's pretty contentious and there are issues, but so far it's held up pretty well. And then it just makes me think about Maker, you know, TJ, because like Maker is also a really complex system, but there's a lot of different divergent views. And so governance has become extremely difficult. And so it is interesting to think about it.
Yeah, it's true. It's true. I mean, which of those is more resilient in the long term? Something that has zero dynamism and complete consensus, or something that has zero consensus but moves at a snail's pace?
Yeah.
One more thing I'll say about this idea of conviction in BTC. You do have these people that are just so ideologically aligned that crazy things realistically have to happen for them to sell. I think another interesting kind of dynamic that pertains to that conviction holder is what's going on with miners right now. So as BTC gets more legitimate, right, you obviously have more people vying for earning it. So, when BTC was at 60K, you can use that as kind of a proxy for desire and demand and legitimacy. So I'm sure when it hit 60K, a whole bunch of people that would have not considered mining it or setting up rigs at 20K were like, this is great. Let's go buy 9,000 miners immediately. Let's maybe take on some debt to do so, right? And so a whole bunch of people did that with crazy conviction in the blockchain. And now we accelerate to today, midway through 2022, and BTC is ticking at 22. So if your economics sort of worked at 60, they're definitely not working now, right? And so what you're kind of seeing, especially with energy, at least fossil fuel prices where they are, is a lot of the economics of these guys is not working, right? And many of them have levered up. So many of them have debt service to pay. And they're kind of getting to the stage where, their run rate is pretty high and their runway is not that long. And unless BTC works its way up above 30, 40, 50, a lot of these guys are going to be in a scenario where they're forced sellers, right? And so we talked about how the market kind of looks like it's been flushed out for now of forced sellers. A lot of the retail leverage has kind of been flushed from the system, but there's definitely this wall and you can't really see behind it because not all the miners are public. But if those guys get jammed up, the only recourse they have if they have to pay down these loans is to sell a whole lot of BTC or sell a whole lot of miners. And which of those two options is much quicker, like which has more liquidity? It's the BTC. And so, I think when you think about who the incremental buyers and the incremental sellers are, there's a lot of uncertainty in the market right now for the incremental buyer. But if things stay as they are with high energy prices and low BTC prices, there's not that much uncertainty around who the forced sellers are.
Yeah.
When you do loans for BTC or when you're looking at the loans for miners, is it denominated in USD?
As opposed to BTC?
I guess that makes sense. It's just, well, they wouldn't want to be loaned BTC, right? So they would want to be loaned whatever their operating cost is. But then, yeah.
So interestingly, I haven't quite cracked the code. The vast majority do lend or do borrow denominated in dollars because, they want their assets and their liabilities to match. But there is a market out there. It's not the rule, but it's definitely an exception of people that borrow in BTC.
Yeah, it seems like you'd want to borrow whatever your operating expenses are, and then you'd actually want to pay in whatever your revenue is, right? I guess in the ideal world, because they're making BTC maybe.
Exactly.
And they'd pay you back in BTC, but then if they have to pay for their energy and whatever their fiat is, then they'd want to borrow in that. But then I guess I don't know how they think about the exchange rate risk or whatever.
All right. Well, as you can see, Shake is an expert on this topic and has a lot to say about it. Dude, why don't we talk a little bit about Sol NFTs? Disclaimer: Shake and Shake and I are coming off of like a 2.5 hour space, so we are like spicy on Sol NFTs right now. We've got a lot of energy, but we could just start it, I guess, by me plugging my own work. I put a thread out earlier today. I used to write a lot of threads on Sol NFTs and like what was happening in the market, but I stopped. And I just wanted to like see it's been really slow recently for those unaware, and like users, it feels like, have died out. Crypto Twitter on Solana NFTs, which is a huge part of the ecosystem, has really slowed down. There's not a lot of new people coming in. If you look at like the broader, just like there's a product called Solana Floor, and they have like a blue chip NFT index, and it's like really struggling. And so I would say like Solana NFT space right now is not in the best place, as with most NFT spaces right now. But there is one positive development, and I think Shake, you can really speak about this, which is what we're seeing happen in Solana NFTs right now is like this huge infrastructure build out that's going on. And when I say huge, I'm exaggerating greatly, but there's a lot of cool infrastructure projects being built. And this past week, we saw this project, Blocksmith Labs, which is like kind of viewed as one of the best like devs and engineering teams in the ecosystem. They built this whitelist tool. They released a Solana NFT launchpad, and the tweet from it was just awesome because the launchpad they built using 4 other protocols. And so for me, it was a really interesting like example. We always talk about composability in crypto, and like how that's a huge value proposition. And this was like one of the real concrete examples I haven't seen in a while, where 4 different 5 total protocols came together and were able to plug into each other to create this really cool customizable launchpad. And so, Shake, I'm curious. I mean, as everyone knows, he runs Cyber Samurai. They've also built out a lot of infrastructure for Cyber Samurai holders specifically, in terms of they have a tool called DojoDB, they have staking and things like that. I'm just curious, kind of, how do you see this infrastructure, and also like why are you taking the approach you're taking, where you're basically trying to become an infrastructure provider in some sense, right?
Yeah, definitely. So what was your question? How would I think about the infrastructure advancements, basically?
Or just talk about Solana NFTs.
Don't get me started, dude. No, I think it's really exciting. Like I know we talked about this maybe last week or the week before, but I just think there's more actual innovation going on now than there ever has been in NFTs, because you have to. Well, again, that was the tweet we were talking about, right, Chris? Is like developers and entrepreneurs are like incentivized to build something that has kind of a longer term outlook, that's more sustainable. Whereas previously, like, they're incentivized to basically just launch a bunch of projects and like, raise money quickly, and retire. So yeah, I think that's this cool side effect of the bear market, is just that more actual innovations happening. And I think it's really dope, basically. Yeah. And here's the tweet. So they have Strata Protocol, Cardinal Labs, Matrica, and Node Monkey that they all used. I didn't even know actually that you could use, like, because a lot of this stuff isn't open source. Cardinal Labs is, but I don't think Matrica is open source. I don't know if Strata is too, but it's definitely cool.
Yes,
it is. Okay.
Yes, Strata is. Yeah.
That
do
was actually
you
a
think,
topic I
Chris?
thought I wanted to
sorry.
bring up, was the open source stuff. If
What
that's cool right now.
can you explain to those of us who have no idea what we're looking at what dynamic pricing, freeze authority, and Discord integration are?
Yeah.
You thankfully don't have to explain the fourth one. I have some idea what that is.
That's actually the one that other people probably wouldn't know. But dynamic pricing basically means that while the mint was happening, like the first project they did, which was called Fruits, the mint price was 2.75 Sol, and then during the public mint, it started reducing in price, until enough people started minting, and it had some algorithm where, like, once people started stepping in and trying to mint, then the price went back up. So the price was it just somewhat like a Dutch auction, except it also went back up, whereas a Dutch auction just goes down in price, which I think is cool. It gets the team more money, like a little bit. So it's cool on the team side. Freeze authority was something that I think is actually kind of whack, but the NFT during the mint, you couldn't move the NFT at all. So you couldn't sell it, you couldn't trade them. Like, I was actually trying to send it out of my minting wallet to my main wallet. Like, I couldn't even send it. So Chris would know more about how that works on a technical level, but basically you freeze. You can't move the fucking NFT. Discord integration was that you went on the website and you just logged in with Discord, and then it acknowledged that if you had whitelist. So usually it's like this whole fucking terrible process around figuring out who has whitelist and then giving them the list of wallets and are you doing it wallet based or token based? And there's all these like variables into the whitelisting process. And this one was just simple. It was honestly so nice for me because I always forget to submit my wallet. So yeah, that's basically the rundown.
The dynamic pricing, I mean, that's sick. I mean, you basically taken a process which is, you know, guess based on this size mint what the right price is, and if it works, great. But it hasn't worked as well as if you had dynamically priced it, and if it doesn't work, then you're screwed. It's kind of like you could see this dynamic pricing model like being used in a whole bunch of different markets. Like even think about like when a company goes public, right? They hire an investment bank, and the investment bank's supposed to go out into the market, talk to some people, and decide what the price should be, right? And then they launch it on IPO day, and it moves around. And sometimes it has a big pop, which means they underpriced it, which means the founders, the team, left a whole bunch of money on the table. And sometimes they overprice it. And when they overprice it and it doesn't pop on day one, that's a really bad look for the project or the company, right? If you built a mechanism that allowed for dynamic pricing for price discovery to happen on the move, like that's sweet. Of course, see, people say there's no innovation in NFTs.
No,
that's really interesting, right? I didn't even think about that. Like if this was open source and like completely on chain, which it might not be. Well, no, you said Strata is. But if you could basically leave that up to like a smart contract with like predetermined, limitations to have price discovery pre-IPO, like that's actually a really interesting potential use case. Because when I learned about that, how they do that, I was really surprised. I was like, that's it? Like they just have a guy go around and like try to figure out like, hey, what are you guys going to pay for this? All right, like
insanity.
It's like super casual.
I mean, you could even argue if you use this dynamic pricing for the investment banking model, like the biggest alpha there is not that like you've more accurately homed in on pricing discovery. It's that you avoid the enormous fee you're paying to Goldman.
I mean, Chris, what do you think, dude? Like you're a builder in Solana. Like this is pretty sick, right?
Yeah, it's cool. The dude who built Strata Protocol seems like a G. Follow him on Twitter.
Top G.
Top G. I'm a bull, but I don't mint NFTs, so I've never used it, so I don't really know what's good. But yeah, I mean, the whole point of crypto is to reduce rent extraction by intermediaries. So to the extent that you can have these auction mechanisms encoded on chain is pretty cool. We're also have a form of Dutch auction in Drift V2, so I'm pretty hyped on. I honestly like never would have thought auction mechanisms are so interesting, but now that I'm like working in crypto and thinking about market structure, they're actually pretty fascinating. So I'm bullish Dutch auctions.
Wait, you guys are going to have a Dutch auction in for what scenarios?
Basically, instead of having like the typical, we're like inverting how takers and makers cooperate. So usually makers have their liquidity sitting on the book, and then takers come and like take the liquidity off of it. Instead, first we have takers place their orders, and then makers can come in and provide just-in-time liquidity and basically fulfill the taker orders. And then that the price of what the maker can make at is based on a Dutch auction. And then if no maker comes and fulfills the taker, then we route it to a different, like an underlying market. So for perps, that'll be the virtual AMM, and for spot, we'll probably route through Serum. So basically, it's like good for makers because they won't get arbed as much, and they can like see what the taker wants first and decide if they want to like actually take the other side of the trade.
Jesus, dude. Jesus. Drift V2 with the Dutch auction and spot. I feel like the VCs are about to enter the chat.
Yeah, dude.
Drift V2 is about to be very lit.
Jesus.
Can I get in a 2K allocation here? Or what's good? You know?
Dude, Shake literally will just be messaging me on the weekend like, yo, can you send me some code you wrote a year ago? I'm going to try to make a product out of it. I'm like,
I'm forking Chris.
Like, you better like give me some. I was joking. Like, can I get a kickback? He's like, I'll airdrop you an NFT.
I was kidding, bro. I don't know if that was clear, but I was totally kidding.
some shit NFT. He's gonna make
Yeah,
millions.
I was like, yeah, bro. Of course, I'll airdrop you an NFT. No, but dude,
No, but
dude,
auction mechanisms are really interesting.
So, okay, let me just repeat it back to you so I understand correctly, because I feel like it might have gone over my head. So the takers like put this order into the protocol, but it's just like a market, like they're like, it's just a market order. It doesn't have price specification. It's just like, it just has size specification.
Mm-hmm.
And then like within like a millisecond or something, makers are able to like look at these and decide, okay, I'm going to fill him. And again, the maker doesn't specify price, but it's like a Dutch auction mechanism that's determining the price between like how many makers and takers there are. Is that right?
Kind of. It's like, so the taker will specify size, and then based on the size, you programmatically determine the price, which is based on like an approximate of slippage. So, like, like, oh, if you want to buy like a shit ton of Sol, you're gonna have a lot of price impact if you just hit the market. So then, like, the end of the auction price is an approximate of what you would get if you just sent the market order, and then like over like 5 seconds, basically makers can come in and fulfill it at a better price. But it still like uses a limit order system. So like the maker can say like, I'll only fill you at $100, and if the auction is going up from like 95 to 105, the maker will only do it at like $100 if the Dutch auction is at like $101 for the taker. So like the maker can still like basically specify their prices that they'll trade at, but the taker's price becomes a function of time in the Dutch auction. So like, I guess I tweeted this before, like a Dutch order is just a limit order with like a floating price that changes over time.
Dude, this is fucking really cool. What was the reasoning behind? Because I mean, this seems like it has maybe some inspiration from Uni's like concentrated liquidity thing on the maker side, but then the other place I've seen Dutch auctions in crypto is literally NFTs. So it's kind of interesting you're using Dutch auctions. Like, so yeah, what was the motivation for like coming up with this whole new way that orders get matched?
Yeah, so I guess the motivation is to provide more liquidity on chain, and how it kind of works in practice is it's very hard for makers to provide liquidity on chain, whether it's just like LPing and like a AMM or like actually making on Serum, because there's actually just like asymmetric relationship between makers and arbitrageurs, where makers need to like basically have their orders sitting on a book on chain, and it's really hard to update their quotes. And then there's just like fleet of arbitrageurs and MEV bots and all these goblins who are just trying to rip you off, and only one person needs to succeed out of the whole fleet. So a maker is really up against like a whole army of people that are trying to arb them. So it's very hard to be a maker. But makers are the ones that provide liquidity. So out of that, you have to think, okay, well, how can I make it easier for people to like profitably be a maker on chain? And then that's how we got to like this idea that, okay, well, the taker, if someone who just comes to a site or just wants to trade and just wants to get in on like a certain position, isn't like really trying to arb. They're hoping that Sol goes up 10% or down 10%. They're not like, like a high frequency trader. So they'll just say like, I want to take here. And then like, you just want to let the maker come in, and they know that this taker is an adversarial, and then they'll pair up. So it's this idea of realizing that it's like, it's okay for the taker, or we're trying to let the taker go first and then make the protocol such that the taker can't be taken advantage of by the maker, but then the maker also can't be taken advantage of by the arbitrageurs. So I guess there's like a few constraints there.
This is
mostly,
super cool,
yeah, makers getting fucked.
It's kind of like some game theory now. I never realized that, of like, why would you be an LP versus ARB, like an MEV guy? If you have the capability of doing both, like, why would you? I guess there's part of it is like size, I'm guessing, but
right. Yeah. So like in a traditional like high frequency setting, I think the makers extract most of the value, but it's one because like makers and takers are like, I guess like they're kind of like they're more symmetric, right? Like a taker, if you send a trade through and it like moves after you send the trade through, you can't just like revert it, right? Where on chain, people will literally like do a trade at the very end of the trade, have a instruction that checks if they made money and revert it. And on a system like Sol, you can just revert
It's
the
like so
like
unfair.
it's so cheap, right? Exactly. So it's just
Those like flash loan things where it's like you always read about it. This guy made $1 million and then paid back the loan in one transaction. It's like, bro, why is he allowed to do that? Dude? That's like,
yeah.
that's blockchain. It's like fucking.
Well, that's actually another interesting thing is like composability on chain is actually like it can work orthogonal to security, right? Like you can do all these things so fast in one transaction that you can just fuck so many things up. And so it's actually good to make it harder to compose with you atomically because it protects um can be security, like it can boost security. For example, like Audius, someone passed a DAO proposal and moved the money in the same transaction, paid back a loan. Where really you want to be like, okay, you pass a DAO proposal, and now there's a cooldown period for a day. You know, like
Yeah.
it's kind of screwed. But then you start realizing why traditional systems have certain cooldown periods, certain throttles, etc. Because like that means that like if you made $1 million on FTX because of a hack and you could only withdraw 10K or whatever, or even if you made like they have your KYC if it's less than or more than 10K. If it's less than 10K, they're like whatever, you can only get off with 10K at one time, you know. So this just like instant composability is just a nightmare for security.
Dude, I can already see the like the counter narrative against composability starting to form. And the governance stuff with the composability is so cool. Yeah, like Shake's putting up right here, like the Audius hack, like this actually happened to Maker also in like 2018 or something, where if you do a flash loan and there's enough outstanding governance tokens, you can immediately force through a proposal and benefit from that. And if you don't, that's why, like Chris was saying, like time locks are such an important feature. But then they raise the question of like, who can overturn the time lock? Oh, my dinner's here. Who can overturn the time lock? And as a result, you have like some sort of centralization of power that might be able to turn over the time lock. Actually, Maker has a really interesting defense mechanism. It requires you to burn your Maker in a security module, but I think that's crazy. Crisp, is the way that you've set it up only possible on chain, like doing it on a blockchain, or is this possible and done in traditional finance as well?
So actually like what we're doing is kind of similar to what's called payment for order flow.
Okay.
Where like in Robinhood, for example, a user submits a trade and then that trade gets like makers literally pay to fill the taker orders, right? Because they're like, I want this juicy trade so bad that I'm willing to pay to fill it. And so and that's how Robinhood gets like zero fees because they're actually getting paid by makers like Citadel to fill your orders.
Got you.
So it's like I guess there's parallels to it. In the like honestly, a lot of these things. It's also similar to it's called like a request for quote system, where someone's like, I want to buy something, and then people will all put in like makers will put in their quotes for it. Um, I think honestly, I think the reason you don't see this in crypto as much is it's just harder to build. Like an AMM, honestly, is so simple to build relative to like what we're building now. And even an order book is relatively simpler to build. So it's kind of like once someone clears one milestone, one primitive, it's like, okay, everyone knows how to build it now. And now we can build more advanced stuff. Right. And to think, and then some people like make fun of like crypto, like, oh, you're using like an AMM. Well, first it was hard to build, and then Uniswap cleared it, and now everyone knows how to build an AMM. And then it was hard to build an order book, and then Serum did it, and now it's like, okay, well, any good dev can build an order book. And then it just like you keep it's like it's a red queen's race, really. It's like exhausting. We're just like one person figures something out, and then everyone just starts copying you.
Dude, I actually wanted to ask you about that specifically. Like that was one of the topics I forgot to tell you guys was open source stuff. Like, so you as well, let's just say DeFi protocols, like how do they think about keeping users? Because from just going to the thing that is newer and has more incentives and lower market cap, like if you do this really cool thing that you're talking about, like, and it's open source, or are you going to open source it? And then when you do, like, how do you set things in place to try to keep users on your platform and not a fork?
Yeah. I do think the more novel your protocol is, there's a period where it's not forked and it's hard for other people to understand. And even now, it takes someone like, no, not anyone could fork Serum, right? Like, and even if you could fork Serum, so part of it is there's honestly not that many good devs that can really fork things. So it's like a small set. And there's a prestige culture, right? Like if I just forked Mango, then I'd have to live in the ignominy of forking Mango and everyone knowing that on Twitter. So there's like the people who are smart enough to fork it, a lot of them don't. And then there's also like integrations in off chain. Like there's certain, I guess, they're not, I'll just call them integrations, right? So like if you fork Serum, you're not going to have basically Jump and Alameda making on you. So no one's going to use your thing. And similarly, a lot of the successful protocols have a bunch of integrations off chain that then greatly increase their value. Like even
Are
like
those
Maker,
things
like they have.
contract? Like, are those like? Do you know, like for Serum, let's say, do they have a contract where like, hey, like Alameda, you guys can't go market make on shitcoin XYZ's Serum fork?
No, like I don't think there's any
It's just a
contract.
matter of like network effects of like,
Yeah,
if
it's
you,
like people sign up, they do the time, like you're first, they take the time to get set up on your system, they know it works, it keeps working, they understand it. Like there's only so many market making firms, they only have so much time and so many resources, and like understanding the novelties of each system is really hard. So it's like once they get something working, like they're going to stick there, right? So like there's just a natural stickiness to integrations. Where more honestly, the people who are like people definitely, market makers will just find if there's liquidity incentives, they'll go and just like pimp them out and farm them. But for the most part, like good integrations are pretty sticky. I think the best protocols end up with a lot of integrations that give its value, that give it more value. Like Maker, right? Well, someone could just fork Maker, but then like who's using DAI as a part of their like DeFi system? Everyone's already using DAI, right? So it's like very hard to fork things. So it's kind of like the source code isn't even like your advantage, I guess, right? So
Yeah,
it's and you need it to be open source so that people like, that's how you start bootstrapping trust. Like if your shit's not open source and it's like a little money box, like why is people gonna trust?
Celsius.
Yeah, exactly. So
Dude, that's super interesting, bro.
yeah, I never thought about it that way, Crisp, in terms of like making your code open source is actually an advantage, which is kind of like the opposite. I would have looked at it, but I have heard a lot about, or I haven't heard a lot, but like who's the Dragonfly guy, Hassine or whatever. Like he's talked a lot about how like Ethereum is basically unforkable at this stage because of like the DeFi protocols that are built on top of it. And, like users are just going to stay with those DeFi protocols because they've got so much value locked into them. And so it makes it very difficult to kind of like hard fork the chain, which is an
But
interesting.
didn't that happen with Binance Smart Chain? Like it already happened, and it got a bunch of users.
What happened with Binance Smart Chain?
Yeah, like Binance Smart Chain is
Or
basically
Bitcoin.
a fork of Ethereum.
Oh yeah, no, for sure. But they can pick up new users, but it's not like,
Oh,
like
they're not gonna,
Ethereum, like
right.
people who are using Ethereum are going to stay on Ethereum.
They're not going to flip Ethereum.
but
Like,
Yeah,
even Binance was able to do that because they got integrations with, like, everyone's already holding their stuff into
point,
Binance.
bro.
You can just
That's
move it
true.
over there. It's like,
I mean, FTX, like FTX US having Solana integration super early, like was a huge plus for Solana, right? And then Coinbase had it like shortly after.
right.
So
The,
people could buy Sol and use it on chain like very quickly.
the FTX Sol integration is just like huge boon for Sol, right?
Dude, can we talk about some of these new chains actually, Aptos. I don't know shit about it, but I kind of want to FUD them a little bit because I'm so invested on Solana. So can you guys have a good FUD on Aptos or
everyone who
Sui
was
or
new to
whatever?
Solana last year and they're just riding the ascending blockchain, and now they're like, wait, you can't do it to me.
Yeah, and then I'm like, wait a second, this is not going to work. I actually heard Joe McCann to give a really convincing case of why he does it. Like he didn't. It wasn't that he thinks it's not going to work. He just said he doesn't think it's a good investment from like a trader investor perspective. He basically was saying, look, everybody like the trade of this cycle was the L1 trade, and the way markets work is like when a trade is so prevalent, it doesn't work again, like because it's a crowded trade. And so he was like, look at the current valuation of Aptos. It's $1 billion. It might even be 2 billion, bro. It's like insane valuation. It literally doesn't. It's literally not on mainnet. It has 0 users, and it has like $1 billion. It's a unicorn L1. And so basically, he was saying it might work. It might become better than Solana. But he's like, from an investor standpoint, he made a really convincing case. Basically, like he thinks he's trying to look where other people aren't looking for value.
Reminds me of Layer Zero, honestly.
We should get Joe on the pod. Maybe once we get more than 100 followers. It's hard to tell someone to come into a pod with 56 followers.
Yeah, bro. Well, no, we have more on Apple, and some people listen on like Apple and Spotify and stuff.
All right, one day Joe will be on here.
But the optics of YouTube are kind of like,
Joe, come for the vibes, lad.
I think, okay, here's my case against Aptos and the other one, whatever. Basically, people are hyping it up that like all the devs are going to go there because it's like a safer language, and then all the users will follow it. But in my opinion, like just knowing the very little that I do about the language is not enough of a big enough upgrade to think like you can build something way better on those chains than you can on Sol. Right? Like there's some cool language features that maybe might make things a little bit nicer, but I don't think they're like big enough that it's going to captivate a wave of builders to go over there. Whereas like part of the reason people started on Sol was because they thought the throughput and the low latency was like really powerful, and they had some like magical experiences when they built on it. Like when I first built on DevNet, I was like, oh man, this is like after coming from Ethereum, it felt like there could be a way better UX. And so they were like, all right, fuck it. I'm going to chew all this glass because I can build this thing that seems more magical. But like now Sol is a lot easier to build on, and it has FTX integrations, has a lot of these things going for it. To go to a new chain and to build that out all over again, I think it needs to have a similar like stepwise, or it needs to be like way off in the design, like the fitness landscape to warrant someone new going there. If it's like, okay, it's Sol, but it's just like a little bit different, like why don't you just build on Sol, right? So it's like Sol went, and that's also why like a lot of the EVM chains that are really close, like I guess that's the argument for like ETH. If you're an EVM chain, it's like if you're just marginally changing things, why isn't ETH going to win? So I think any new chain has to make a compelling step in the fitness landscape in order for people to have enough conviction to go build over there.
I mean, it has to. If it's not a stepwise upgrade, then you're going to have difficulty competing with an existing network effect. Like, look at when Sol popped off. ETH was preposterously expensive. No one could transact on it. I feel like the stepwise function here would be if Aptos somehow found a way to convince people that it would run slightly faster than Sol, but with 0 downtime, and then it actually executed on that, like over a course of 6 months. I mean, that could be big.
Yeah. Like right now, people are literally like, it's using this language move, which makes one form of exploit harder to write. You know, it's like
it's such a meme, dude.
And this exploit is like an easy exploit not to write. You know,
like
Dude,
what's also does anyone?
I love the FUD, bro. I love the bear case on Aptos because I don't want to have to learn a new thing, bro. I'm comfy. I don't want to have to go cross chain again, bro. I just want Solana to make it, and I get rich.
Dude, that's
you know?
that's how everyone's thinking. You know,
that's the clip. That's the clip for this week's video. I don't want to learn something new. I don't want to learn about Aptos. I'll get everyone to watch the pod.
So what I also feel like, you know, at some point, like we can't keep having like, okay, like it's good to try to innovate, obviously, and there's capital that's willing to bet on it. But like at some point, like I'm not saying this is now, but at some point, like it's apps, right? It's at some point, it's like that's where the innovation focus is. I mean, we're not trying to build a new internet every day, right? Like I'm sure in 1998, like people were, trying to build like, oh, this new internet protocol, right? There was probably like 10 of them, and people were funding it a bunch. But then it's like, oh, it's whatever TCP and IP, right? So, yeah.
Dude, you're just a soul maxi. This is Cope.
I am kind of a soul maxi. This is
You
what
sound
made
like
me.
Kobe. You sound like Kobe when he was mad that people not holding ETH were getting
Bro,
rich. He's like early as a service, blah blah blah. It's like, you're just mad that there's a new run up.
Yeah, I mean, I am 100%. I am. Like,
Shake,
like,
remember, dude,
like
when you
1 year
get
ago, I was the scrappy guy. Like, I'm gonna bridge everywhere and try everything. Now I'm like, bro, God, I have a company on Solana. Like, fuck, come on. What am I gonna, come on, guys, let's chill with it. But yeah, that's the thing. Kobe's thing I'm thinking of too, right? Is like there's this game of like, the investors invest in L1, and then the L1 incentivizes developers, and the developers incentivize being early, and then like whoever comes after that is just like getting fucked, like really hard by everybody else dumping on him. And I'm like that it seems like that definitely can't go on forever. It might go on for another cycle though, like just with how this shit works. Like I could easily see it going for another 5 years, but Solana's going to make it. It's going to be the number one blockchain. Quick upgrade. We got fucking local fees and shit. Come on.
I think are we going to end it here? We don't want your girlfriend to get mad at you, Lucas.
It's my girlfriend's 1 year in the U.S., so we're having a celebratory dinner.
What'd you guys get?
Chinese food.
French fries.
Does she regret coming here after the fact that like the dollar is slowly debasing itself, and soon we won't be a world power anymore? And she picked the wrong country.
I don't. We haven't
Dude,
had.
this
that
is why you never get laid, bro. If you're talking about shit like this.
We haven't
why
really
you struggle,
broached that
man.
topic, but we'll be sure to cover it in dinner. 1 year in, how do you feel about the dollar being debased and the U.S. downfall?
What's funny, bro? Is Shaney like always tells me like, dude, you talk way too much about the economy, Because I'm like, isn't it so crazy that like inflation is over 10%, And I'm telling her, I'm like, imagine that 10 years, your money's literally worthless, I'm like, and I like think it's interesting when she's like, God, you're just fucking fudding me so hard. It's not good romance talk, I guess, is because I've tried it.
Dude, what I've learned is girls just want to have fun and not talk about crypto.
Nobody not just girls. Nobody wants to talk about crypto. Okay.
Yeah. Except for us, and that's why we do this podcast, baby. Gang shit.
I think if I've learned one thing from this podcast, it's definitely that makers take from takers and takers take from makers, and then there's makers and there's takers. There was probably like 10
and then
minutes.
There's fakers, bro. And we ain't them. That's all I know.
Dude, there's also bakers on Tezos, whatever that is.
Oh, dude, there are bakos
and there's pancakers, pancake swap, Binance Smart Chain. That's where I got started.
Dude. And there's the LA Lakers.
And there's the shit, bro.
And there's OX Shakers.
Sounds like we've got a good. Sounds like we've got a
shakers,
good,
baby.
We got to
sometimes
start
I'm a
like
taker,
a
sometimes a
intro
maker. I'm
like
always
that.
a shaker. My boy Anna Madim. Shout out my boy Anna Madim in the audience, bro. Good to see you, my man.
Yeah,
Hey,
we appreciate your energy, bro. All right.
Yeah,
good episode.
Let's wrap it up. This is fun.
This one's gonna get a lot of hits, I can tell.
Let's actually show this one on Twitter this week. I feel like we forgot last week.
Yeah,
we got to get to 100 followers so that we can start getting guests on.